Hey guys, welcome back. If you're enjoying the Q&A so far, do me a favor, make sure you subscribe and hit the thumbs up button. That way you don't miss any future videos or the rest of the Q&A. Part 4 is next. But today, we're talking first about FTMO. Now, this is a company that is becoming more and more popular with traders on the internet because they're putting out a lot of ads and they're getting their name out there by saying that they're funding traders and they're putting money behind retail guys like you and me to fund them and get them larger accounts. So people have been asking me, Austin, what's your opinion on this? Can we go with this? Should we try to go with this? Should we spend our time on it? My thoughts are this, and I'm not here to knock anybody's business. I don't mean this in any disrespect to FTMO or any other business out there. That's not what my channel is here to do. I'm just going to say that I don't know anyone that's made money using them. I know a lot of people that have tried and ended up not talking to me about it anymore after that because I told them that I didn't think it would work. Just because, in my opinion, there are no shortcuts. That's just what I think. I know you can go to a prop firm and get funded, and that is a route that a lot of people can go. But this funding of retail traders thing, I think, is short-lived. It has something to do, in my opinion, with all the available credit in the economy right now, and I think it's going to be, like I said, short-lived. But I could be wrong, and people could trade with them and make money, and that's great. But for me, I didn't need it. I don't think any of you need it. I think if you don't have enough money to trade right now, if you need more money to get to the size that you want to get to, that's fine. But it's not going to come from FTMO. You need to find another way to generate income. Trading is entrepreneurial. You shouldn't be closed-minded to think that trading is going to be your one source of income, because right now, for most of you, it probably isn't. You're going to need to generate multiple streams of income for a long period of time to build up a trading account that is 6-7 figures big that can then sustain you full-time if you wanted it to. But at that point, you're going to have other businesses and you're not going to just trade. That's what's happened with us. As our trading account has grown, it's opened up other opportunities for us to put our money in different places and see the return from that to create other income streams. So that's what I want to see all of you do, is accept the entrepreneurial aspect of trading and not look for that shortcut in FTMO or any other funding company. If you want to go the prop route, that's fine. That pulls you out of the retail space though. I'm talking guys that want to stay retail like me. The best thing for us to do is stay entrepreneurial. So if you want to ever brainstorm with me about business ideas, I love talking about it. I love growing businesses. So please reach out to me. I'm more than happy to discuss that with you. The second question for today's video is going to be the top 5 pairs that I'm trading this month. Today is Monday, March 9th when I'm filming this. I want to talk about the pairs that I'm trading this month, and I have been trading in February, and what I think I'm going to be trading in the future, because I know some of you are probably watching this after Monday, March 9th, right? So for me, right now, GBP pairs have been hot because of Brexit, but right now we're seeing such a big sell-off behind me. They're talking about it still in U.S. equity markets that's creating a lot of volatility in euro pairs and U.S. dollar pairs as well. You're seeing higher than average ADRs across the board. All the pairs are moving more than they have been in the last couple of months. But I think specifically where we should be focused in the next 6 to 12 months is GBP pairs, Euro pairs, USD pairs. Those are the top 3. Past that, JPY and CAD pairs are my favorite, if I have to. But majority of my time, majority of my money, go look at the trade recap videos. It's been Euro CAD. Now, there's good reason for it. With Owanda, I get better leverage with Euro CAD than I do with Euro NZD even. I get the 1 to 50 with Euro CAD. I only get the 1 to 33 with Euro NZD, and it's even lower on GBP NZD. It's 1 to 20. So knowing that, and knowing that Euro pairs have volume, I lean towards the Euro pairs as much as I can, because today I pulled 14.5% gain on Euro CAD because it's ripping. I mean, it's 600 something pips higher than its average daily range today behind this volatility. So which pairs am I focused on right now? Euro pairs, GBP pairs, and USD pairs. Now, this question tied into another one I want to briefly discuss, talking about scanning the market the night before. Now, I don't do that. I don't think it's necessary. I think that too much happens overnight in Forex to scan the market and try to make a plan the night before. You should come to the chart that morning, get here 15 minutes early, and do your plan that morning. There's no reason to try to do it that night. I just think you're killing time. You're going to need to do it again in the long run when you wake up anyway. So there's no point, in my opinion. Do markups, do something else, be more productive than that. The last part of this question that all kind of stems together is how many pairs am I trading? I will look at all of the majors and minors, all the USD pairs, all the GBPs, all the NZDs, all the AUDs, and all the Euros. But I'm not really trading AUD pairs. I'm not really trading NZD pairs. Again, it's GBP, it's Euro, it's USD. That's where I'm finding most traders are, which creates volume. There's volatility, which creates bigger moves. So it's a no-brainer. It's easy to get in and out, and the money's been very, very clean for me riding these trends. It's very, very simple. So as much as it's fun to look at USD TRY and USD MXN and all that stuff, it's just not for me. I'm focused on the bread and butter, the pairs that have low spreads, the pairs that a lot of people are trading, and the pairs that are moving for me well. It has to be a combination of all those things. You need the low spreads, you need the volume, you need the access to get in and out very easily, you need that liquidity. So it has to come together. And right now that is GBP, Euro, and USD. Now, the next question I want to address is, how do we prepare for the news? Do technicals work after the news? So right now, there's been some breaking news events. A couple days ago, we had the emergency rate hike cut by the US Fed. That was an emergency event. That was breaking. That wasn't scheduled. But for the most part, Forex news events are scheduled, which means we can see them coming. So the way that I like to approach it is, if I'm trading a pair and high impact news is coming on Forex Factory, if there's a red folder, for example, a red CAD folder or a red USD folder, whatever it is, those red folders, high impact news events, can shake the market. And by shake the market, I mean spreads can open up. And sometimes that'll stop me out of a trade too early, before it actually moves in the direction I want it to. So what I've done over the last few years that's led me to consistency, and I hope you'd implement this too, is I don't trade into high impact news events. I don't trade NFP, I don't trade FOMC, I don't trade any of that stuff, because I think it's volatility driven by amateur traders, driven by a lot of high frequency trading robots as well, since we knew they do most of the trading in the market anyway. So it's something where you have a lot of order flow coming in, it's better sometimes to stay away. Now, the question also asked, do technicals work after the news? Absolutely. I found great trades on Friday of NFP before NFP hits, and I found great trades after. But trading through the NFP is never necessary. It's more volatile, it puts you at more risk. There's no reason to do it. So avoid high impact news, but prepare for it by reading Forex Factory in the morning, seeing what high impact news events, and also subscribing to our weekly email, because Riley writes an email every Sunday that sends out to our whole list, a couple thousand people, and tells everybody which high impact news events are coming that week to avoid. But of course, you should check Forex Factory that day to make sure that you're up to date on what's going on. So as far as the news, avoid the high impact events, trade before, trade after. You just don't need to trade into any crazy news events. It's not necessary. Now, the last question ties into that one similarly. Should Forex traders pay attention to equities? And I think absolutely. As active traders in financial markets, we need to know what's going on everywhere. I keep Bloomberg on in the back. I just subscribed to their upgraded service the other day. So I'm always about seeing what's going on across all markets, not just in US equities, but also in Australian markets and also in European markets. I want to know what's in Japanese markets. I want to know how is the world reacting, because that drives volatility in Forex, and volatility means opportunity when you have a good system. If you have something that tells you when to get in, when to get out, where to put your stop loss, where it could possibly go, then yes, this volatility is fantastic, and we want to pay attention to the equity market and like I said, the European market and the world markets, so we know what's going on. So when US markets are getting smacked, I'm able to say, okay, let's keep the euro long bias and look for longs. Find opportunities on EuroCAD to buy it, and boom, we make money following what's going on in the equity market, knowing that equities are going down. I mean, today, I think they're down 1,800 points. I mean, getting smacked. We can use that to then say, let's buy EuroCAD, and that's why I made 14% today. So absolutely, as an active trader in the market, you have to pay attention to everything, but it's important to say you want to know what you know and know what you don't know. And that was, like, I think an Albert Einstein quote, I think, and it's so true. I know my systems work. I know what I know. I know news events shake them up. I know I got to avoid those high impact events, but past that, I know what works, and I don't know everything, but I know what works for me, and that's what I'm going to focus on. So can I explain to you why the news events do what they do? No, but I know what they do. I know that they do what they do, and I know how to avoid that and avoid that choppiness, that volatility that can hurt me. And then I can then shift it and put myself in a better probability position to use the volatility to my advantage. So I hope we covered a good amount of questions here. I think this is another good chunk of the Q&A, covering a lot of questions, which I really appreciate from everybody on Instagram. If you enjoyed the video today, this is part 3. I've got one more part coming for you. Just do me a favor, make sure you give me a thumbs up here and subscribe so you don't miss any of the future videos. Now let's move into part 4.